deep expose of inefficiencies and liquidity. But we break lower, we have this sharp run here, and then we have this small little area here, and it doesn't fill in that area right there. Notice that? Now here's where the details are missed when you see other people try to teach my stuff. And folks, I understand that you like what I'm teaching and you want to go out there and you want to be an educator, you want to influence other people, and you want to feel like you're empowering other people. You have to learn correctly before you start teaching it, because talking about it in hindsight is not enough. I should have charged admission, really. But there's times where I teach, when I'm doing my live executions, you'll hear me either talk about it or I'll type it out. And I'll say, I want to see this fair value gap stay open or remain unfilled. It would be ideal for this gap to stay unfilled. That means it's not going to come back up to the high of it. And we're going to look at all this tonight, and we're going to look at it in great detail. But just know that between 108.40 and 108.60, around that 108.50 level or so, we're going to look at a lower time frame. Right now, this is a 4-hour chart. So we're going to drop down into a 1-hour chart, knowing that we have sell side liquidity here, and this is the draw on liquidity. I believe that's likely. And look at the bodies of the candles respecting this order block right there. See that opening price right there? Extend that through. All the bodies of these candles right here are holding price down. It's only wicking through it a little bit. These are like little mohawks, okay? Ultimately, price breaks lower, and then this candle we open, traded back up, immediate rebalance, and then we're just marking time right now. The 1-hour candlestick. Now here's where the folks that don't know what you're talking about, okay, and I'll be honest with you folks, if that pisses you off and it offends you when I talk like this, you're just gonna have to warm up to the idea that I authored this stuff. And when I see other people trying to teach it incorrectly or pretend they know something when I know they don't, and then try to market it, it's offensive to me. And I have a voice in this because it's my content. I created it. So if you really want to warm up the idea of knowing how to do this stuff, you're at the source right now. You're going to hear about it. You're going to see something tonight that hasn't been taught to you. You're not going to see it in their other stuff. Okay, they're 5-minute trainers. You're not going to get anybody to be able to condense this into a quicker version. So just roll your sleeves up and pay attention. This gap is based on the 4-hour chart. Okay, let me go up one more slide, okay, so we can get our calibrations. 109, big figure, that's this high here, and then 108.50 in that vicinity is this gap. So this red level here and this red level here, that's a 4-hour fair value gap, and these two levels are a 4-hour fair value gap. So let's go up one slide again. That's this, the 109 big figure, and the 108.50 level that's in here. Okay, so we're looking at this fair value gap on the 4-hour and this fair value gap on the 4-hour in a 1-hour time frame, because this chart right here, if you look up here, it's a 4-hour chart. So my next slide is a 1-hour chart. So here's that 109. We have the low of the 4-hour of this candle and the high of this candle, but the gap is formed on a 4-hour chart. When we see it drop down into a 1-hour chart, we have this inefficiency, yes. It trades up to it and reprices to the high. This is what you expect. You want to see it trade there and stop dead in its tracks. That is institutional order flow. Does it react to it and go lower? Yes. Then the market attacks what? What's resting below here? Sell side. The market does, in fact, go below that. Then it created in this run below that low, that 108.60 to 108.40 level, which is the 4-hour fair value gap. This is the high of the 4-hour fair value gap level. This is the low of the fair value gap on the 4-hour. This little inefficiency right here is denoting simply that candle's low and then this candle's high with that one big down close candle in the middle. Imagine for a moment, okay? Imagine that you understood that dollar was bullish and euro is bearish. And you were sitting right here where my cursor is. And you were shrunk down like Ant-Man in Marvel, and you were standing right at the point of my cursor. And then you looked left. what would you see? You would see this wall of price action right here. And then if you had x-ray vision, you could see there was two other panels or layers until you got to this old low and old order flow over here. So if you're looking at price action from this perspective, looking back, look how price has moved back and forth in here. You see that? And then on this one big candle down, you only had the separation between the candle's low prior to it and the candle after its high. That's what this little red shaded rectangle is. So on the 4-hour chart, this high of the fair value gap and this low of that 4-hour fair value gap, it does not need to reprice up to that high like it did here on this one. Why? Because you have this efficient delivery and balancing of price action. It's delivered to the downside. The next candle we open, trade up, and then trade back down. Right there by itself, that's balance for me. Then it throws you one more confirmation. We open, trade up one more time to it, and then rejects hard, leaving at this candle's close right here, that small little inefficiency right there. When you see me talk about in commentary while I'm taking a live trade and I'm typing out when I draw out the fair value gaps, I say, I want to see this remain unfilled. What you're not privy to is I have 12 monitors in front of me, and I have 3 monitors to the right. And I have 2 small little devices, okay, which are like, they're Samsung, like they're not iPads, but I can't think of, they're tablets, that's what they are. It's 2 Samsung tablets. And I have the laptop that I talk to you all with my social media. When I'm typing in, or if I talk about it while I'm doing the trade, and I'll say, I want to see this fair value gap stay open and unfilled. It's ideal or optimal for it to not fill in. What you're not seeing, because I'm not trying to show every chart, I'm not trying to hide it from you, but my attention has to be focused on what it is I'm following. I'm not just simply looking at the chart I'm trading. I'm looking at all the lower time frames too, and I'm reading price action just like this. So imagine for a moment that that 4-hour chart, let's go back up one slide. Man, I should have charged money for this. This inefficiency right here, right there. If I'm going short in that, I am telling myself that it should not go up there and touch the top of that fair value gap. It should stay open, unfilled. But let's just say that this was a 5-minute chart, not a 4-hour. And this was like the ES or any other market that I'd be trading, and show examples of me doing it where I type out and it never fills it and it keeps on running. How does ICT, how does Michael Huddleston know how to do that? There's so many people in the comment section that you don't see because I don't let my comments post anymore because, again, I'm not giving a stage for jerks. And I appreciate all your love and affection, but it's not necessary for everybody else to see that. It's for me, so just know that I read all of them. But this inefficiency here, let's say this chart was a 5-minute chart, not a 4-hour. And then we drop down into this time frame, 1 hour. So this would be like a 1-minute chart, or maybe it's a 30-second chart, or a 15-second chart, or a 5-second chart. But ICT, I don't have that data. You don't need it. Just trade the time frames that you can. But on a lower time frame, less than 5 minutes, and it could be on the second chart, if I see in between those two ranges, the low and the high of the fair value gap, I anticipate trading up into and wanting to be short, I see this inefficiency here. I do not need or anticipate or expect price to go up to the high of it because it's already done this. 1, 2, 3. And then the small little inefficiency here. That's why it stops dead in its tracks in a consequent encroachment, which is half of that gap here on that candle there, and then stops at the low. And then you see it fail, leaving this portion open. That's real institutional order flow. These jokers that talk about volume profile in my comment section saying this isn't real order flow and you know what they're talking about, you have no idea what they're talking about, because the market's not working off of volume profile. It's operating and delivering on an algorithm. It's coded to do this, and I don't care if you believe it. Okay, I'm out here doing it. I'm out here showing it, and I'm teaching other people how to do it, and they're doing it, and they're making real money with it. So it's either the biggest conspiracy and collaboration of fraud of everybody being able to be right at the same time doing something. We're not really telling you what it is, or it's what I said it is, and they're all following it. So you decide what it is, okay? The people are making money. I'm calling it live. They're trading it live. They're making money. It is what it is. You came here to learn. I'm teaching you. This is how I know when gaps are not going to completely fill. because on a lower time frame chart that I'm watching, and I have one specific chart, or not chart, but I have one monitor that I have that I call a matrix. Okay, it's an intraday matrix where it allows me to look at 5, 4, 3, 2, 1 minute candles, and then I toggle and I can go down into a 45-second chart, a 30-second chart, a 15-second chart, a 5-second chart, 1 second chart. So I'm looking for these types of signatures in every inefficiency I'm watching on price. So again, if this was a 1 minute chart and the 4 hour was like a 5 minute chart, the relationships that on the lower time frame, it's showing you delivery. This is real order flow. I do not need to see a depth of market. I don't need to see level 2. That's all gimmicks. Those things can be spoofed. You cannot spoof a candlestick or an open, high, low, and close bar. You can't spoof it. It's there. Everybody sees it. And it's time-based. The algorithm runs on time. So for the folks that have been dying and chomping at the bit, I've given you right here, this is the technique, the concept, the ICT blue ribbon seal of approval, how to know when an inefficiency or gap won't completely fill. On lower time frames, you're going to be reading price action. And if you have all this back and forth movement, that's layering. So that's why I said if you were at the point of my cursor, shrunk down minutes, like a miniature U, and you were looking to the left, you would see a wall of price action here, and another wall, and another wall before you get to the old order flow. So it's already moved back and forth 3 specific hours of back and forth price action near the high end of that 4-hour fair value gap. So there's no necessity for price to go up above really this candle's low, and it doesn't even get to it there. It stops midpoint of that little small inefficiency right there, and then does one more time here, fails, slides. All right, here's the 15-minute chart of the euro dollar, and now we're getting down to the brass tacks of intraday price action, and we have the 2022 model right here. Stuff doesn't work, apparently does every day, but you have a gap, relative equal highs. What's resting above these highs? Buy stops. The market rallies up, runs through, engages the buy side, and trades into the inefficiency. Why doesn't it trade all the way up and touch the top of that? Well, what's this candle doing over here? It's one single pass and then one single pass. That's a balanced price range. That's why you don't get all the way up in there. So there's 2 different forms of knowing how I don't anticipate a full closure or repricing to a fair value gap high or low respectively. If it creates these balanced price ranges where it's one single pass and then one single pass in between those 2 candles, the high and low, the highest of the gap, which would be this here, and the lowest would be down here. So that's your that's your balanced price range between these 2 ranges. This one big, I know some of you are confused right now. I have a lesson coming for this. Do not freak out and stop trying to insist I teach it faster to you because you can't wait patiently.